Okay, so if I'm looking at any company, the company's sole purpose is obviously to operate and to create value. And they do that with the help of different departments. So can you think of different departments within an organization?
As in just in general departments.
Yes.
So there'll be a financial department, technical, HR,
Good.
customer relation. Yeah, it's the same. I'd say. IT.
Okay, you could even look at maybe more specific to inventory, maybe like procurement or production or sales.
Sales, yeah, sales.
Okay,
sales.
so procurement would be looking at the buying of goods and those resources or those inputs that are required for the business to actually operate. Right, so the business's goal is to obviously make a profit by creating value for customers, okay, for users of those products. Do you agree?
Yes, yes.
Okay, so when businesses operate, their sole purpose is to identify the costs that are going to go into making a specific item or buying and selling a specific item, depending on what type of business we're in. Okay, so when we look at assigning costs, is the finance department going to need certain things to operate?
Yes, I'd say so.
Correct. Is the IT going to need certain things to operate?
Yes.
Yes. But remember, these are all separate businesses. Well, not businesses, separate departments within the business. Does that make sense?
Yes.
Okay, so if finance is one department and IT is another, HR is another department which is separate from all the other parts of the business, and all of these business units or areas in the business are going to have to operate together in order to generate a product or a service. Does that make sense?
Yes.
Okay, so the final product or service is going to be sold to the consumer. But now the big challenge is, how do we then price or assign costs to specific products? Right, and that's what we're looking at in terms of the assigning of costs.
Okay.
Okay, another word for describing that is cost allocation. Right, and you get different methods that allocate costs to different products, different outputs. So if I had to simplify management accounting, it would be looking at this. Input, getting output, or creating output, and then you've got the stuff in the middle, and that's the actual management accounting. Okay, so let me just put a heading here. Okay, input, and obviously we use certain things to produce certain products, services. Okay, so that's what management accounting is focusing on. It's looking at the company's ability to create value, to offer a product or service to the market, and in order to produce a profit, okay, in order to generate revenue, they need to sell those items, okay, i.e. those goods and services, at a profit, okay, at a markup. Right, so the first step when pricing goods is to establish its costs. That's the first step. Right, and that's what management accounting is looking at doing. It's managing the internal running of the business. Okay, so if I'm going to be using certain things to create certain products, in terms of input, I'm probably going to need the finance department. I'm probably going to need some IT. I'm probably going to need some HR, some people, right, etc. Marketing, sales, all of that stuff. Right, so all of that's part of the input, and those are different departments that operate within the organization. Right, those departments are obviously going to incur costs. Do you agree?
Yes.
Okay, so those departments don't operate without requiring any resources. All of those departments need resources in order to operate, and those resources cost money. Okay, it costs got cost of the business resources in terms of their capital. Okay, so operating, creating value. Okay, they're going to be using capital.
Yes.
Okay, the funds within the organization. Right, so now if I'm going to be assigning costs, I'm going to have to be looking at those activities. Okay, all of those different areas, and I need to then decide on what is the best way to allocate or to assign those costs to those different products. And that's what you're looking at here in terms of this whole idea of cost allocation. Okay, assigning of costs.
Okay.
Does that make sense?
Yes, 100%.
Okay. Classification is looking at the behavior of those costs. Right, so let me just take one example. Finance, IT, HR. Obviously, all of them are going to need space. Do you agree?
Yes.
Okay, space would be seen as rent. Okay, we're either going to be renting space or we're going to be buying a building and we're going to be using the space in order to operate. Right, but now if I look at the classification, okay, but specific to costs. Right, when I deal with classification of costs, here I'm not looking at how do I assign the costs. Here I'm looking at how do those costs behave. So do those costs change or do they stay the same? So we get fixed costs, we get variable costs, we get costs that can change or costs that don't change. Okay, so you do get semi-variable, you get semi-fixed. Okay, that's what the diagram is trying to show you in the actual textbook. Okay, on the first page, page 5.
Yeah.
Right, they've shown you that classification. Right, but now we don't only classify costs in terms of fixed and variable. We can also take it a step further, and we can look at specific costs related to production. Okay, and there you're looking at things like direct material, direct labor, manufacturing overheads. Okay, I'm just abbreviating, okay, just to show it. It's in the textbook. That's just theory.
Yes.
All right, so it's important to have an idea of what that actually looks at, because it's difficult to do workings if you're not fully understanding what the basics are in terms of this whole idea of allocation.
Right.
Okay, is that making sense?
Yes.
Okay,
100%.
great. Right, so that's important to take away from this particular chapter. Right, if I page through the rest of the chapter, they've just given you details here regarding direct costs, indirect costs, manufacturing, non-manufacturing. Okay, that's all theory.
So yeah, direct. Yeah, so I know. I do know things. I do know that direct materials and direct labor, manufacturing overheads is total manufacturing costs, and
Sure.
I know, like for example, direct labor and plus manufacturing overheads is conversion costs.
Yes.
So yeah, I do. I think I did summarize like a whole 2 pages of that.
Okay, perfect. So that section you're fine with. I don't have to spend too much time on it.
Yeah, no, I'm fine with that. Yeah.
Okay,
So-
100%. All right, something that was covered in study unit 1 that applies later on, which is something to consider. So just a note here, page 11. All right, they've given you a small example here looking at fixed costs per unit. Okay, the reason why I want to highlight this point for you is because when you look at later calculations, ones that are a bit more, let's say, longer, in B, you have to look at individual basis or bases. I don't know if that makes sense. A base.
I understand what you're saying though. I do understand.
Okay, so the base will either be units, or it could be time, or it could be, let's say, labor hours. Okay, so time is labor hours, or manufacturing hours. Labor hours, manufacturing hours.
Could it be, for example, machine hours?
Machine hours, correct. All of those, yeah. All right, so that's something that you need to consider because that's part of other calculations. So when you look at something basic like what they've given you here on page 11, right, the thing to take away from page 11 is that you can take something that's fixed or something that's aggregated. Okay, so in other words, a total. So you could take a total for a specific cost. Okay, so here they've looked at all the fixed costs. Do you agree?
Yeah.
Okay, and what have they done here? Well, they've taken the total. So fixed cost could be rent, expense.
Yeah.
That could be a possible fixed cost that a company would have on a month-to-month basis that they would have to cover as part of the operations. Okay, so maybe if I just use the amount that's given in your textbook, 15,000, okay? This would be the fixed cost per month that is going to be incurred as a whole in terms of the business, in terms of the operations. Okay, so now obviously, depending on our output, okay, it comes back to what we said here. See, input, output. So the input here would be, inverted commas, rent, expense. Okay, the output is obviously going to be the number of units produced.
Yeah, sure.
Do you agree?
Yes.
Right, so now the challenge is the middle part. Okay, that's what you're actually looking at when dealing with management accounting. You're looking at the cost allocation or the assigning of cost to certain products. So, if I look at this example, if I've got 15,000 Rand per month, and let's say I produce 100 units. Okay, in terms of a basis for allocating those costs, those fixed costs, I'm going to be using 15,000 divided by 100, which is 150 Rand per unit. Right, and that'll have to be built into the cost price of that particular item if you're going to be pricing it based on this method.
Okay, that makes sense.
Does that make sense?
Yeah, so I did look for example for 200. So it would be your rent. That's the fixed cost per unit. To include the rent, it would be the rent divided by however many units produced. So if it was 75 divided by 75, and that's how much it is per unit.
Yeah, so I'm just using this as an example because here they use per unit, but it can be per labor hour or per machine hour. It all depends on the question, but you do need to consider that. That's important to understand for later on. Okay, so just a note, NB, you need to look for those drivers. They call them cost drivers.
Yes, cost drivers.
Okay, because those drivers will basically allocate more or less cost towards a specific item depending on the operations. Okay, so that's something to note in terms of basics, right? Okay, happy with that?
Happy, yes.
Great. Okay, so let's carry on paging through the module or paging through the textbook just to see if there's anything specific that I need to look at here in terms of workings. I think the rest just looks like theory. Okay, I see period cost. Okay, then the summary. Have you been doing these self-assessment questions? Hey, Matthew?
So no, I actually haven't because I was focusing on also auditing, which is auditing and tax took up quite a bit of my time.
Sure.
And I was late, so I've just been trying to do as much as I can, a bit of just to get back on track.
Yes, 100%. Okay, so the nice thing about these self-assessment activities is that they actually give you workings, and UNISA has done a pretty good job of explaining the workings in the actual solution. So, I mean, I'm not going to go through all of these because it'll take too much time. So I would suggest if you are struggling with something specific, we can always discuss it next week if you have anything specific that you've looked at that you've struggled with.
Cool. So I'll go, obviously, after today. I mean, I'm going to 100% study before the next time we have a Skype call. So whatever I'm struggling with throughout that till the next week, I'll just write it on a piece of paper.
Make a note, yes.
And then we can just go straight into that.
100%. That's brilliant. Yeah. So today I'm going to just give you kind of like a crash course of all the workings, all the calculations, and all the important sections. And then over the week, I think do that. Look at what you've covered and look at specific things that you've identified as areas that you need more help with. And then I can focus more time on that rather than focusing on things that you already know.
Yeah, correct. No, that's our notes, yeah.
All right, perfect. All right, so looking at this, you already mentioned earlier that you're familiar with prime cost, conversion cost, manufacturing costs. It's just grouping costs into different categories so that
Yes.
you can total it up in order to get an amount that you can then allocate.
Yes, yeah. So I've got
That's
a good,
study unit 1.
good summary. Yeah. So prime cost and primary cost is direct material plus direct labor. Yeah. So I think I've got that all. Yeah.
You got that. Okay,
Yeah,
so I'm
so-
just going to summarize here at the top. Study unit 1, important. It's just looking at classifications of costs. Classification of costs. And then why is that important? For allocation later on.
Yeah. And that would be the cost drivers and looking
Yes,
at
but
cost.
that's a bit later.
Later.
But as long
Yeah.
as you've got the classification right, then you should be able to allocate it correctly, depending on what they've given you.
Yeah. No,
Okay.